Good morning, everybody. This is Jack Gleason with Startuptrading.com. It is 9 o'clock in the morning, May 28th, 2020, Thursday here. Economic news this morning, we had preliminary GDP, which was negative 5%. Pretty amazing. And then core durable goods orders came in at minus 7.5%, durable goods orders minus 17.5%, and unemployment claims at another 2,123,000. Pending home sales is going to be our first news event after the open. That's going to be at 10 a.m. Then we're going to have natural gas storage and crude oil inventories as well. So just a reminder, crude oil inventories will be coming out today. That'll definitely be a volatility event for crude oil. FOMC member Williams will be speaking at 11 o'clock. And then after that, we have nothing left until this evening, where we have news out of the Japanese yen with the unemployment rate at 7.30, as well as their CPI numbers at 7.50, preliminary industrial production and retail sales. 9.30, we're going to have the private sector credit for the Australian dollar. And then tomorrow, at our final day of the week, we have Canadian GDP, personal spending for the U.S. markets, a core price index for the U.S. markets, University of Chicago PMI, University of Michigan consumer sentiment, personal income, preliminary wholesale inventories, and Powell will be speaking. So tomorrow we actually have a pretty packed news event for the markets. We get a lot of news coming out, but obviously some big news today with really our first GDP report since this all began, negative 5% growth. It's a pretty big hit, but market up, right? We rallied, Dow up 240 points, even though it's worse than expected, but does not seem to matter. So it's just the time of the news that we want to pay attention to. Something that I want to bring to your attention here today, guys, before I kind of dive into this video, is I haven't shared it yet, but part of like the trade grading system, I just want you guys to be aware of where the leg starts are and where the swing marks are. So you'll find on my charts, not so much the Dow, I haven't done this one very accurately yet, but on some of these other charts, I have done different levels and I've marked them all up separately. So on the daily chart, everything is going to be marked with a dashed line. So that's like there's a daily swing mark right here. And then with that, there is this dashed orange line. Orange lines are swing marks. Now, the shape of the line, whether it's dashed, dotted, or solid, is based on the time frame. I guess that's how I would explain it. This is actually dotted. So dotted is daily, dashed is hourly, and solid is 4 hours. So if you see a solid support or resistance level on my chart, that means it's a 4 hour resistance level. If you see a dotted level on my chart, that means it is a daily level, and a dashed level is an hourly. So wrap your head around that. I'll get a level key going to share with you guys. So if you go to the 4 hour chart here in the S&P 500, you'll notice I have these solid white lines, solid orange line, solid white line. If you go back to where they're drawn from, this is a 4 hour leg start. This is a 4 hour swing mark, a high swing mark. A purple solid line would be a swing low, and then leg start. So, these levels are going to come into play. Now, here, yesterday, we have a 4 hour swing mark. I would just come in, draw a solid line, right click, edit the properties of that price level, and change that color to purple. And that actually lined up perfectly. It's kind of hard to see now, but there's a dashed or a dotted orange line. This was a previous swing high in the daily that we ran into yesterday on those lows. So I just want everybody to be aware of what these are as I go through my analysis, and especially when we get levels that line up together, I think it'll be really helpful for you guys, and just so that we're all on the same page. But we'll go over that in further detail later, but just so you know what those levels are coming from during this morning trade plan. All right, with that all being said, I'm going to start off by analyzing the S&P 500. We had this 50% retracement on the higher time frame on May 15th. We blew into an extension. That extension completed its profit target. Now, we were looking at the extension to extension on the prior day. Now, that actually ended up piercing and we ran all the way back down into the original extension. That 38% retracement was at 29.69.5. In the previous daily swing high here was at 29.65. So we stuck that level and we began ripping the face off the market. Going into the prior day, there was a traditional short that completed profit targets. We then had our next measured move. This is before the market opened. That blew through its negative 61 right at the open. There was an extension that was sold into, completed targets. There was a same anchor new high that was sold into and completed targets. And at the point we were running into that 38% retracement and that daily support level, we were through all of our profit targets, and we had actually just dropped like 30 some points fairly quickly. And then really there was this same anchor new high above, and there was nobody home. We just ended up rallying straight up through these resistance levels. Now, in these cases where we go straight up like we do, there's almost like as if there's not a sequence from lows. This first halfway back, technically broke. You could argue drawing from that 50, but even that didn't trade. So this whole sequence up, I think, was a pretty difficult one to trade. It really wasn't that technical of a sequence. And there's often when I see these types of straight up moves, what we run into is I just drop that first 50% retracement. And if you can see this halfway back for the day was really, there was people selling into this move. For sure, there was people selling into this move because at this point it was a trend break. There was short sellers, but this is in the middle of the day. We started selling and trading that level at 12:45. And we went totally sideways at that halfway back until about 2 o'clock. Okay, and then it was just an absolute monstrous squeeze into the close. Now, when we go straight up like that, I like to use this 50 as this anchor because it's just like the high before the breakout. And that is what I had drawn up. I had actually dropped this in the chat room last night, this setup in the laser setup section. But anyway, we have run into this support level, the 50% retracement. I'll remove this green line because it's traded now, but with the 50% retracement was at 30.2775, or you could even round up to 30.28. We've traded it. 38 is 30.31s or 30.34s. Our upside targets, bullish above 30.2175, is 30.66. 30.66 is the upside target here from the S&P 500. Now, it's also important to note that now that we have gone through this negative 23% profit target, the possibility of us actually trading the extension from the high of April 30th to high is a possibility. Okay, there is a high from April 30th to high. Now, let's say this extension does not hold here today. Where are those levels going to line up below? Well, the 38% retracement, this is what I'm going to start doing with marking up these highs. This is actually going to be, I got to change the color of this, but this is, see, it's a dashed line. It's an hourly swing mark. Okay, it's an hourly swing mark. It's a 38% retracement, so that's where that 38 would be. I'm going to delete a couple of these. But right now, as long as we stay above 30, if we start dipping below 30.27, my first support would be that 30.1975, which is that previous high of Tuesday and that daily extension I had drawn up. All right, so that's what I have here for the S&P. Moving on to the Dow, which is exploding, just straight up. You can see I have this dashed line up here, or sorry, that's dotted. It's kind of hard to tell. This is a dash. This is dashed. So dotted is daily. So it's a daily leg start. Our extensions on the higher time frame did complete. We are in an extension to extension sequence, and this was the killer move yesterday. So we blew through those profit targets on the higher time frame level. Those blew through on Tuesday. We ended up going straight up into the open on Wednesday, and then the open came and it was just straight back down. Now, the extension, just like that explanation I said in the S&P of what could happen, the same thing can happen here in the Dow. Or the same thing that happened in the Dow can happen in the S&P, and it would be the exact same setup. The extension is from 24,327, and we ended up running into, and it was a leg start too. There was a leg start, and we just ran into that leg start and went straight back up. It was a leg start, 38% retracement of the extension. We went straight up, and we already completed this profit target. We already completed this profit target, and that was so from 25,000. The profit target was 25,652. It's basically a 652 point profit target completed in half of a day. That's incredible, and it was technical. Now we've blown through that target, and we are straight up inside an extension to extension, which is drawn from the prior swing high to high. The prior swing high to high. Now, that gives us a bullish above line in the sand of 25,541 with an upside target of 25,871. Even if we did break lower here, I would still want to be watching potential. Let's see here. Here's the halfway back. I would want to be watching. I don't think we'd get to it, but you never know with this market. The full 50% retracement from the prior day's low to high, if that came into play, it would line up with the highs we broke out of. If that came into play. We don't know if that comes into play, but if that comes into play, it lines up with the prior swing highs of the previous day. So on a deeper sell-off, if we fail to break out, that would be the level I'd look for. Moving on to the Nasdaq, which is, as Perry went over this morning, it is still the most bearish of the indexes. We were anticipating the possibility of getting a full 50% retracement from Thursday, the 14th low to high. Now we got it. And when did we get it? Well, there was a halfway back short going into the open yesterday, and that negative 61, and this is a lot of times what I like to look for. If we complete a negative 61 and there's a support level right below it, all of these shorts are so out of place selling below this low, this 29.30, they're out of place selling below this low, and that's where you really get that rocket ship back higher. Now we have broken above officially the full 50% retracement. We broke to 61. So after that happens, that's technically a halfway back long, a valid halfway back long. Now we've already traded this, and you can actually see there was a sloppy short right into the overnight session, the European session. We went sideways. That target lined up with that halfway back long. So that was a double confirmation level that just traded not too long ago. Kind of got to, sometimes a lot of the moves, guys, just so you know, I'm at my desk at about 7 o'clock East Coast, 7 o'clock Central, 8 o'clock East Coast. A lot of the moves happen a little earlier before I get on. I just, do it a half an hour before the bell. So I encourage you to get up early and check this stuff out. Yesterday, guys, we had this second test of this CL. I put this in the laser setup section. Now, we did dip in a little bit of the support, but where this support comes from, it's the extension from 2674 to the high. And also there was a profit target of a short. Now, yesterday we had this 50% retracement short I had mentioned at 33.50. We traded it, completed targets at 31.56. So this 31.56 level in just this entire zone, this was, I know it's a little bit of a dip here, but you had a profit target of a short, a 38% retracement retest, and a 4-hour leg start. I'm just going to continue to respect this zone moving forward. And we did technically break that next traditional short. We did break that next traditional short. I want to see if we can crack the full halfway back. If we can crack that full halfway back short, there could be a continuation setup. But right now, I would just pay attention to the top or the bottom of this range. I'm not interested in this short. It's already traded here. Did have a decent reaction, but because we came off the second test here, still leaning to the upside, which is where the trend has been in oil. Moving on to USDJPY, which is kind of still consolidating. If we can clear, and this is a 4-hour swing mark here, this level at 107.91. If we can clear that, I do think we can begin pumping higher, but we just are back and forth from the, and then yesterday we kind of came out of that bottom of the range. We were back and forth from the top of the range to the bottom of the range, and the halfway back long from the swing low of the week, which was happened on Wednesday to high, was a 107.64. It had its participation yesterday, but we've really gone nowhere, so nothing too exciting going on here. Moving to the Aussie dollar. The Aussie dollar completed yesterday a long target, and we came straight off of that and then went into our next measured move, which was the swing low of Friday to high. Now we did pierce that 61.8, and then we came back and defended in the overnight session, and we have begun lift off here. We have a double leg start higher, right? So green, so that's a bullish sequence. You could make the argument that there's also this 50% retracement long that's completed. As far as the next entry, the only thing I'd be interested in is the low of the day to the high. So whatever that high ends up being, we are on highs right now, so this draw could continue to adjust. That would bring us back into the center of the consolidation, so that 66.20 level as of right now. And then the higher time frame upside targets are 67.20. And if you take a look at the daily chart, guys, this has been a very bullish reversal. And if we can clear, and I think this was the March 9th FOMC meeting, is when Powell did that emergency 50 basis rate cut. So that's a pretty significant daily resistance level. But if we can clear those 66.84s, I think this thing is just ready to take off here. Moving on to the euro, which just mentioned in the room is ready to break out. We have this dotted orange line right here at the 110.17s. We're breaking above it. That's a daily resistance level. I have nothing until the 110.06, but there's plenty of upside targets here. We had a halfway back on Monday that has an upside target of 110.74. We had a halfway back on the prior day that has a target of 110.67. We had a halfway back in the overnight session that has a target of 110.52. So there is multiple stacked targets to the upside here in the euro. And if we can get a pullback from the low of the day to high, that'd be a gift to get long. That'd be a gift to get long. Moving on to the pound, which they're all following these dollar weakness trades, all of these currencies here today. Now there was a collapse into a halfway back long yesterday, and we caught a bid. There was a 50% retracement overnight. Once we complete that, we'll just have the next measured move. If we get up towards that negative 61, I think anything above the 123.30 here today, if we do get up to the 123.30, at that point we'll have completed a full negative 61. There's a 4-hour leg start up there, and that's where that solid white line is. So that would be pretty difficult, I would think, to stay any further above that. So it's either next measured move long or just a blowout potential reversal. USD CAD, I was hoping for that we'd get up to the 50. We have not. There is this extension I have drawn from a 139.78. Now, we traded that 38% retracement. If we make a new low here, though, I will actually re-engage. There is this other extension here. I will re-engage from the low of Tuesday. So this had held to target yesterday, and then same anchor low technically pierced, and then you can see it was actually sold into again. But if we make a new low, I will re-engage that extension. But otherwise, we really just downside targets, bigger downside targets here. A 138.68. 138.68. All right. And then gold and silver. Now, gold rolled its futures contract yesterday into the GCQ, I believe, Q20. There was a 50% retracement out of a double bottom. We double bottomed, bid higher, 50% retracement long into an extension. The extension was a little sloppy, and we did go through our targets, and there was an extension to extension here. That is the current trade in play. I'm looking looking to trade just a lower, less aggressive extension from yesterday, that 17.15 to high. This is going to line up into, you either have the 38% retracement, which is at this hourly leg start at 17.32.4, or that 50% retracement at 17.29, which lines up with the prior daily high. Okay, so we can continue to move higher here, but those are the two levels I'm looking at. And then last but not least, we have silver, which this traded earlier and just not too long ago. Once again, just kind of a reason to, sometimes you got to be at the desk before I get on the mic. But we just traded this 1775 extension. We've just gone straight up. There is a 4-hour. Let's just look at this chart here, guys. This thing I still think is primed for a bigger move. We are building a daily flag inside of a very bullish trend inside of an extension that has upside targets of 1860. Okay, and if you look at this daily chart, guys, and let me just back out a bit. Once we start clearing, once we start clearing these highs here, okay, I have daily swing mark, daily leg start, trend line, right? This is set up for, let me go to a weekly chart. And it's been a long time coming, but this is going to be a huge breakout. And I think silver can really start trading up towards possibly 25, not too far away. Because when silver runs, look at the last time silver broke out. It's almost running off the rim. It was about 10 years ago. And we broke out, and it was the first month. Let's see, that's like a $2.80, and then it rallied $3.20, and that's like a $5 range, and then it just started exploding. And look how long we have been inside. You could just call us a giant, absolute giant bear flag, or except it's a commodity. So when commodities break out, this is just really something to pay attention to on that higher time frame. I myself am pretty personally invested in this breakout, so maybe I'm talking from a bias, but just something to be aware of. Anyways, that's going to wrap up this video. Everybody take care. I'll catch you guys in the trade room. Let me know if you have any questions. I'll share my levels. Let me know if you guys have feedback about the whole new level key system. And then you can ask me questions about that, as far as how I'm determining support or resistance levels. But I just think it'll be really helpful for you guys to determine trades and then use that. As I posted in the announcement section the other day, the trade grading system, which I'm still doing a little bit of adjustments on.